All right, beautiful. So many people will be asking, especially for those who are new to cryptocurrency, you might want to go there and be like, okay, what is crypto trading bot? What is a robot? Say, let me just give you a brief definition. I don't like reading in my presentations, but let me just do this for the sake of doing. So crypto trading bots are, first of all, they are automated software. Okay. They help you to buy and sell cryptocurrencies at the correct time. The main goal of this software is to increase revenue and reduce losses and risk. So like we always say on RoyalQ, you do not make losses. Why? Now, for those who are new, you must have heard of stories of people who have lost money in crypto. So if you've ever heard of, okay, let me even know. So if you've ever heard of people who lost their full accounts in cryptocurrency, they told you they were liquidated. Let me get a yes. If you've heard of people with that kind of stories, let me get a yes. If people have told you that kind of story, and if it scares you, let me get a yes. Let me know. Okay. Beautiful. Now, there's one thing you need to know in cryptocurrency. When you're trading, especially on Binance or many exchanges, there's what we call spot trading and there's what we call futures trading. On spot trading, you are putting your money, your capital there, you're buying a coin, and you're saying, if this coin goes up, good and fine, I'm making profit. So it's like you buying gold ordinarily. So let's imagine you buy gold. As of today, for example, you're buying gold, maybe gold is that portion of gold you are buying is 50K, it's worth 50K. And tomorrow, the price of gold falls, and that 50K worth of gold is now worth 30K. Do you still have the same amount of gold? Yes or no? Do you still have the same amount of gold in your hand? Sure, you still have the same amount of gold. So if tomorrow that same amount of gold now increases, the price of gold now increases to 80K, you still have the same amount of gold in your hand, right? It's just that the value has now increased. True or false? Let me get a response if I continue. Beautiful. True. That is the same thing with spot trading. In spot trading, you buy a particular quantity of a coin. So you are buying that quantity at that point in time. If the price of that coin increases, good and fine, you still have the same quantity, your value has increased. If it drops, you still have the same quantity, just that the value has dropped. That is spot trading. You are not losing a dime, okay? But in futures, this is it. In futures, you can even trade more than your capital. So this is what happens in futures. In futures is you want to trade, for example, you are having like 10,000, you're having $200, okay? And you want to trade with $1,000, but you don't have $1,000. You can go to meet Binance. So this is the analogy. You're meeting Binance, say, Binance, how far? I want to trade with $1,000, or I want to trade $1,000, but I'm having just 200. Binance will tell you, okay, use leverage, meaning that your $200 will times it by 5, you're making $1,000. We are borrowing you the remaining 800. We are borrowing you the money. That is what leverage is. So when you use leverage, same thing happens in forex. When you are leveraging, you are borrowing. Now, but since you are borrowing, if you're borrowing in a normal bank, they'll tell you bring your properties, bring receipt of this, bring receipt of that, right? As collateral. But in Binance, the collateral now you're using is your own capital. So you're borrowing extra $800 from us to make it $1,000. Good and fine. The collateral is this money in your hand. This is your $200. So if, for example, now, if in Binance, you're entering either long or short position, what this means is if you're buying a coin and you're using futures, you're either saying, Binance, I am buying now, and this price of this coin must go upward for me to start making profits. That is futures. That's long position. If you're opening a short position, you're saying, I am buying now, but this coin must continue dropping for me to make profits. So whichever way, you can make profit on futures. But the problem now is this. If you're opening a long position, you're saying this price of this coin must go upward. They will be nice to say, okay, good and fine, the price will go upward. But if the price falls below, so let's imagine Bitcoin is 59,500 and you're using 5x, Binance will tell you, okay, good and fine, you're opening long position, no, I will borrow the money. But if this price of Bitcoin falls below 59,000, you're buying at 59,500, for example, Binance will tell you, if this coin falls below 59,000, your $200 is gone. And truly, if Bitcoin falls below 59,000, you have lost it. I don't know if you understand. I don't know if you understand this idea. If you understand this explanation, I don't know. Let me just know. So if people tell you that they lost their portfolio in crypto, that is because they are doing what? Futures. In RoyalQ, nothing concerning us concern futures. all we're interested in is what? Spot trading. So first of all, you do not make losses. So you don't make losses. So the next thing you need to know is there are a variety of bots in the market, okay? And there are different types of robots in the market. So for example, this is the Triality robot. This is worth $59.9 a month. So an average of $60 a month, basically. And usually you'd still basically need to pay some little gas fee when using it. Same thing with 3 Comma, but this is about $49, an average of $50 a month. So imagine what you're going to be paying in a year. In a year is over $600 thereabouts, excluding gas fees or just the normal registration. Now, Wonderbit is same thing, $50, 49.9, which is $50 a month. So in a year, you're talking of like $750 a year. Now, this is RoyalQ Bot, one of the cheapest and one of the most proficient bots in the market, and it goes for just $120. As at the time of doing this slide, this was like a month or two ago, it was about $100. So basically, it has added price. And for something to add price, it therefore shows you that it is valuable. Because when you go to your Google Play Store, for example, and you search for RoyalQ, you're going to see that this is a bot that has what? 500,000 plus downloads on Android alone. So imagine those who are using iPhone, those who are using their laptops. You can imagine the number of people who are using this to trade. So for when you see us being, teaching you how to use it, it's not the case we're just showing you something we are not sure of. It is something that has proven itself and it's been tested and trusted. Now we're going to the technical aspects of RoyalQ. So let me tell you, put on your seatbelt. It might get a little bit difficult at this point, but I'll try as much as possible to make it as interesting as it can. But do not be discouraged. We're going to learn. Like I said, one Zoom meeting is not enough for you to learn this, but one Zoom meeting is enough to show you what you want to do and to show you that this is a way you can make money. I'm not going to bother myself with telling you how to sign up. Whoever invited you here should have that kind of knowledge to teach you how to sign up and all that. I'm just here to show you how to use this bot. So go back to the people who sent you to this Zoom meeting and they'll definitely guide you through. So having said that, now in trading, remember I said something about, so let me use this graph here. Okay. All right. Now remember I said something about trading. In trading, it will be very unwise for you to use all your capital to buy once. Now there's a pattern of trading. This bot is created to work with dollar cost average. So there's what we call dollar cost average. This is what I've explained earlier. The same thing as quantitative, basically. So in the dollar cost average method of trading, if you're having like $200, for example, and you want to trade, the dollar cost average will tell you, do not use this whole $200 to buy once. What you need to do is use 10% to buy at various times. So if I have $200 and the price is 69,000, price of Bitcoin, for example, is 69,000, I would buy with $10 at this point. Okay, $10 at this point, or sorry, 10%, which is $20 at this point. Okay, if Bitcoin reduces, for example, it falls to this point, I would buy with another 10%, which is $20 at this point. Now, if it falls here, for example, I can buy with another 10%, which is $20. Now let's do one analogy. Let's now see how interesting quantitative trading is. So let's imagine this. Trader A, this is an example. Trader A, he bought Bitcoin here, which is $200 at once. Okay. Now Bitcoin fell to this point. Okay. And now it rose to this point. Is Trader A making profit at all? Yes or no? He bought with his $200 once at this point. It fell here. It rose here. Is he going to make any profit at all? Let me get my response. Idris said no. Okay, Solomon said no. Any other person? Let me see. Okay, David said no. Why is he not making any money? Because for him to make money, the price needs to go higher than when he entered, right? Before he can make money. True or false? I guess that's true. So, okay, let me not waste much time waiting for the response. So the price needs to go higher than when he entered to make money. Now, let us now imagine trader number two. He bought with $20 here. The price fell here. He bought with $20. Eventually, the price fell here. He bought with another $20. Okay. Now, if the price goes up here a little bit, to this level that it is he making any profit at all? Is he making any profit? Beautiful. Why is he making profit? Because remember, he bought one position here, he bought one position here, and he bought one position here. So with the price going up, meaning he's already making profit on his third position that he opened. Okay, and possibly even on his second position, because this seems to be higher than the second position if we draw a straight line here. So it seems to be higher than the second position. He's making profit on his third position and on his second position. That is it. That is what this RoyalQ bot does for you. It is just a simple analysis of how to use this bot. So now let's now go into the more technical aspect as into RoyalQ now. So as we're even talking, as you can see, okay, I think I left this open down. Let me just refresh it. And let me open it back. So as we're even talking, you can see the bot, my robot has already executed some trades for me. So you can see 6 notifications here basically. So I think, okay, there's a new buy. Okay, new buy, new sell. So you can see new sell, new buy, new buy. So I'm going to explain why you're seeing all these messages. It's basically working even while I'm doing my Zoom presentation. So now this is the robot here. I'm trading just one single coin, which is AVAX with $500. Okay. So for those who have already activated their bots, this is just to tell you that it is not by trading many coins. No, it's by having a strategy that works for you. So the first thing you need to do is this. When you're trading a coin like this, you need to pick a good coin first of all. So you pick the coin you want to trade. Okay. Now, after picking a coin, now usually this is usually, let's even start. This is the #1 challenge. What coin do I pick? That is the #1 challenge. And there's so many coins in the market. But the number of cryptocurrencies are over 10,000, if I'm not mistaken. But it is not just every coin you see you trade. This is what I do, and it works for me. Now, there are some coins. Now, first of all, I do not trade coins that are too volatile. When I mean volatile, there are coins like SLP, AT and all that. Now, those coins, you might want to use them to just make some quick profits, but these are not coins you can use for dollar cost average or you can use for quantitative trading. Why is it so? Now, a coin like SLP, for example, back then it was trending. So many people were using it. Even when at a point in time, I discovered what it was like, and I was like kicking against it little by little. Now, why is it bad to trade a coin like that is too volatile? It's because there are some coins, they have the ability overnight, they will do 80% loss, like 80% profits. The next morning or 2 days after, you are seeing minus 82% loss. So they are just too volatile. It's good. They might give you some quick cash, but when they drop, sometimes those coins are very difficult to rise. Now, this is the case of SLP. Many people bought SLP when it was 0.2, that's 2 cents. Right now, SLP is 0.07. So only God knows when next is going to come back to 0.2. That's a problem. So what are the kind of coins I go out for? I go out for coins that have established market capitalizations. Usually when I go to coinmarketcap.com, so let me just show you for those who are new. Coinmarketcap.com. Okay. The CoinMarketCap. So this is coinmarketcap.com. So usually when I want to trade, I come here and I pick coins that at least are within the top 15. Now, these are my favorites I trade if I would want to trade. Ethereum is something I can easily trade. It's a well-established coin, though it's not the #1 on my list. Usually the #1 on my list is what I'm trading right now, AVAX. Followed by AVAX, I would want to trade Solana. I would want to trade Polkadot. I want to trade XRP. I would want to trade Cardano. Okay. Same thing with BNB. I want to trade BNB. And AVAX, you can see AVAX is like number 11 presently on this list. So these are coins ordinarily that I look at my favorite coin. Litecoin might also be there, but rather than Litecoin, I want to trade Uniswap, probably. You understand? So these are coins that I see as coins that are consistent. So their upward and downward movement, they are also volatile. Okay, they are volatile, but their volatility is not as high and as crazy as other coins like SLP or ATA that can go plus 80 and do minus 82 and stay there before they go to the next plus 80 or something. I don't know if you're getting this explanation. I don't know if this is well understood. I don't know if this is well understood. Okay, if it's well understood, let me know in the chat. Is this well understood? I'm still waiting for your reply. Okay, so first question or the first challenge is done. Someone is requesting something. Let me see what that request is. Okay, the site. Okay, let me just type the site in the chat. It's coinmarketcap.com. Okay, this is it. You can coinmarketcap. Okay, okay, coinmarketcap.com. Okay, so that was the site in the chat. So now, having said this, having stated this, we are done with the number one challenge, choosing a coin. So AVAX happens to be one of my most favorite coins. Okay, so the next thing you need to now do is, first of all, go into RoyalQ. So assuming you've activated your bot, and okay, someone is saying there was a time Shiba was among the top 10. Now, Shiba is a coin I have never traded. That's because it also happens to be one of these coins that, first of all, when you really research into Shiba, you discover that Shiba is a community-driven coin. What do we mean by community-driven coin? It's a coin that it is the hype, it's coin that it is marketed. The more people are marketing it, buy Shiba, that's when the price goes up. So it is community-driven. If you want to trade coins that have value in themselves. So for example, trade coins that are solving problems in real life, coins like Ethereum, coins like BNB, coins like Polkadot, Solana, AVAX. These are coins that are solving problems in real life. So since they are solving problems, people naturally would want to buy them. So for example, if you want to have a project in the Solana smart chain network, you would necessarily need to interact with Solana. If you want to have a project within the Polkadot smart chain network, you will definitely need to interact with Polkadot. But not just a coin that is survived based on the marketing strategies and the hype. So that's why I've never really loved Shiba, and I've never really taken Shiba seriously. So just this is an aside for you to know. So the moment you've registered your bot, which your upline would help you to do, and you've activated your bot, which it should also help you to do, and you've connected the robot to Binance, which it should also help you to do. I have videos about them on YouTube, so you can easily check the channel, Digital Wealth Academy. You can just search through. I think, okay, let me just send you the links for those who probably will need to get any of these videos. Well, for the registration, make sure you meet your downline. If it's for the binding and other videos like this, most times after Zoom meetings, for the ones that are very interesting, I download them and I upload them on YouTube. So just for the days you might miss Zoom meetings and you want to watch, you can either see some of them on the channel, so you can get to subscribe also. Now, having done these aspects, okay, it's in the chat. It should be in the chat right about now, so you can subscribe to the YouTube channel to have an idea of some of all these things and get updates. All right, the link to the channel is being updated right about now. Okay, that's the link. So after you've done all that, one thing you need to do is, first of all, come to your profile, which is called Mine. This is your profile over here. So come to Mine and make sure the professional edition is on. So this professional edition, what is the professional edition, first of all? Now, ordinarily, RoyalQ by default, so let me come to quantity. When you come here, you see general. Under general, RoyalQ will give you a list of some coins. Now, these coins here are defaults by RoyalQ. And why is it like that? So these are coins that, first of all, in the judgment of RoyalQ, they are good coins. Just within using the same yardstick I have told you, they are good coins to trade. For example, you understand? So they are not very volatile. At least you are sure of the coins, or in their own judgment, they are sure of the coins. Let me put it that way. So for example, when you come to general here and you type a very funny coin like SLP, you will not see SLP here. Nothing, no records. When you type in ATA, you will not see anything here. But the moment you own your professional edition, okay, it simply means that you are telling them, I'm a professional, I know how to select coins by myself. So here, you now see more coins from Binance. So coins, for example, like ATA, you can now see it here. For example, you can see coins like SLP, you can see it here. Okay, for example, so you can see the present price, 0.06. Many people bought this coin, it was at 0.2 cents, but presently still struggling at 0.06. So you can imagine, that's why I say avoid coins like this. So now let's imagine you've picked a coin like AVAX or Solana or whatever it is, AVAX. So I'm going to go to AVAX and I'm going to show you the trade setting I'm using for you to understand it basically. So I'm going to trade settings. So once you click on the coin you want to trade, go to trade settings. Don't worry, we'll quickly touch this one shortly. Go to trade settings and click on trade settings. So we are here. This is where the bulk of the work is. So we'll be starting, but I need to know if I'm still carrying everybody along. So if you're still with me up to this point, let me know. Let me get a yes or a no. All right, beautiful. So they're basically, wait, really? I opened double position. Okay, I think I should have closed. Sorry, I'll explain this. I think I should have closed this long ago. I'm surprised I opened it now. All right, so basically, there are 1, 2, 3, 4, 5, 6, 7, 8, 9 things we need to learn. So let's get started. Now, the first question you're going to be asked is first buying amount. So what is this first buying amount? Now, let's imagine we're the ones interacting with the bots. So we're interacting with the robots right now. So you want to trade with the robots. So let's imagine you have $500 like we are using here. So let me just use this structure. So if basically you're having lesser amounts, you might want to use lesser structure, but let us understand the basic thing here. If you understand the basics, you will do wonders with this robot, I promise you. But do not depend on anybody just understand the basic thing. So I am having $500. Let me tell you what I put into perspective when I was setting this account the other day for those who missed out. So I was having $500 and I asked them, so if I'm having $500, how much should we use to buy? Like at every point you are buying, how much should we be using? So the argument was between $40 or $20. So we argued. If I use $40, for example, calculator, so 500 divided by 40. So I'll be able to open 12 positions, meaning any position I'm opening will be $40. That will be 12 positions. But I like opening more positions because at every point the market is dropping, I am buying at any single position. So I like more positions. The more the positions for me, I think the better I am able to enjoy these markets. So we now argued, okay, why don't we use 20? So we now use $20. So if I'm buying with $20, I am able to open 25 positions, 25 positions. So that was how we came out $20 here. So $20 here simply means I am opening 25 positions. So this first buying amount, the first position I'm opening is my number one position. So after opening my number one position, meaning I can open how many more positions? Let me get the answer now. How many more positions? I'm waiting for your chat, answer in the chat. I want to open 25 positions and I'm already opening my first year with $20. So how many more positions can I open? 24. 24, beautiful. That is why you see margin call limit is 24. So meaning I've opened my first position and I'm telling the robot I want to open 24 more positions. Do we understand it? Is it clear enough, right? Is it clear enough? Is this clear enough? Okay, beautiful. So the next question is open position double. This one, I will explain it shortly. If I forget, somebody should make sure they remind me, but I'll explain it when I start talking of the ways you can manipulate your strategies to the dance. The market is like a dance. So as the market is dancing in one, this thing, you can also dance. So, but let us now go here. The next thing is hold position take profit ratio. Hold position take profit ratio. Now, this simply means you're opening a position. Okay, let's imagine this is a ladder. So you're opening a position here. The bot is now asking you, how many percent profits do you want from this position? How many percent profits do you want from this position? So if you were to be the one, how many percent profit would you want to choose? Let me see those. Let me just be free. Ordinarily, if you're setting this bot by yourself, you're a newcomer, how many percent profit would you want to choose from every single position you're opening? How many percent profit would you want to choose? Be very bluntly, you're saying 1.1 because you're saying 1.1. Yeah, copying me. I like people like Abdulaziz. He said 5. But I like your strategy, Jerry. Somebody said 10. Oh boy. Somebody said 15. Oh boy. 50. Yeah. 50. So I'm mad though. 50 is too high now. It's too high. It's too high. All right. The truth is, nothing is wrong. Oh. If you are doing one shot, for example, I will try and talk about one shots today. Okay, I'm trying to talk about one shots today. Okay, but the truth is this: the truth is 50 is too high. Okay, 10 might be too high, and I'm using 1.1. Okay, I'm using 1.1. I will tell you the reason why I'm using 1.1. Another person will host a Zoom meeting tomorrow. He's using 2.5. He will tell you the reason he's using 2.5. Okay, we all have the thing is, in as far as you're able to defend what you are doing, then it's right. If you're able to defend your 50%, it's right. So in as well, let me defend my 1.1. So the reason why I'm using 1.1 basically is quite simple, and this is it. So, why is my finance? I think I need to get a new phone. One of my phones are hanging. That's because there's too many WhatsApp groups I'm joining. I think it's affecting The speed of my phone is usually hanging. Okay. So basically, one Bitcoin is $59,000 now. One Bitcoin is $59,000. Well, first of all, as we are just progressing, hope you're understanding what we've been doing from the beginning, or like hope I'm not just running and everyone is like, hope we can really remember what we have achieved today. I need a concrete response, please. Hope we are like following this journey. It's more of a journey. Hope you are understanding. Okay. All right. So beautiful. So Bitcoin now, as we've seen, Bitcoin is 59,400. All right. So Bitcoin is 59,400. So the person, somebody said he would take 10%. So let us calculate this. 10% of 59,400 is what? 5,940. So 10% of 59,400 is what? 5,940. So if you say you want to take 10%, you are indirectly saying 59,400 plus 5,940. So if you want to take 10%, it therefore means you will only sell. So this is Bitcoin now. Oh, okay. I think it's working now. All right. So if you are buying now at this point, hope you can see this cycle I'm drawing. If you're buying now and you say you want to take 10% profit, you will only sell when Bitcoin reaches what? $65,000, 65,430. You will only sell when Bitcoin reaches what? 65,430. So 65,430. That's when you will sell. So whenever Bitcoin reaches 65,430, you sell, and it's presently at 59. How long will it take for it to reach 65,430? We do not know. Okay, it might take tomorrow morning, my wake up, it might be at 65,430. Good for you. They have made 10% profit. But what if it takes up to a week before it reaches 65,430? Meaning for a week, you will not trade, you will not do anything. But let us now imagine 1%. So let's now go back to our calculator. So what is 1% of, so 1.1, 1.1% of 59,000, oh, 59,400. 1% of 59,400 is $653. So what this simply means is the moment Bitcoin rises to any $653, so from here, the moment Bitcoin rises with $653 stuff. So if we add this now, 59,400 plus 653, 59,400 plus 653. So the moment Bitcoin reaches 60,000, you have sold 1%. If it falls back, you are buying again. If it reaches, you are sold again. So let me now ask you. Number one is to do 10% once. So 10% once, 10% once, and 1% 10 times. Which one is easier, number one or number two? Number one is 10% once. Number two is 1% 10 times. Which one is easier to achieve? So beautiful. It's easier to achieve number two, 1% 10 times. So that is just the simple reason you see me and many other presenters you might watch later on, we tend to prefer to use 1.1 over here. So this is subject to change. There are some people that might use 1.3. Now, the reasons you might want to change it is this. There's sometimes, like right now, AVAX is bullish. So sometimes the market will be very bullish, okay? The market might be very bullish, okay? So it's okay, the way this coin is moving, I want to change it to 1 point something, it depends, but I just prefer something like 1.1. At most, the most I can use is 1.5. That's the highest I can use when I'm doing normal cycle of dollar cost average. Then the next thing is this. This is quite technical, so let's pay attention to this so that we won't repeat ourselves over and over. This is profit callback. So what is profit callback? And profit callback simply means, now there's some times, so let's imagine. So profit callback simply means this. There's some time, okay, now you've told, okay, look at this place first of all. Oh, where did I enter now? Oh, okay. Oh, let this load on time. So, okay, I think it is loaded. So just some minutes, my phone is okay. Now, I want all of us pay attention to this. Do we notice that this place is moving consistent? It's changing. Can you notice the movement up here? So look at these two places first of all. So look at it here. Look at this place and look at this place. Try and observe the movement. If you've noticed the movement and the change in price, the continuous movement up, down, and the change in price, just send a yes, let me know if you've noticed this movement. The continuous movement over here and here, if you've noticed it, let me know. Now, beautiful. And the price of a coin is always fluctuating, either upward or downward. So this is what happens. There are some times, for example, you've already told the robot, take profit for me when it gets to 1.1, for example. Take profits from me when you get to 1.1. Now, let's imagine this straight line here is 1.1. So the price is coming, it's coming, it's coming. It reaches 1.1. Okay, it reaches 1.1. Now, this is the beautiful thing the robot does. If, for example, the price keeps on going, it doesn't do anything. It will leave it. You can come on your own and manually close your position. Okay, that's one beautiful thing. For those who do one shot, sometimes you might observe that the price goes above. You understand? The price, if you're doing one shot, I'll explain what one shot is in this presentation. But you might observe, for those who do one shot, you might come in sometimes and you see that you set 5%, but the price is going above 5%. The robot won't do anything. It's going to assume that if you're watching it, you can stop it by yourself. But the moment, and this is it, the moment it reaches this 1.1, this is the take profit, it reaches here. If the price tries to come down, that's already activated the robot, for example. Then the price is now coming down, meaning it has reached the target, but it's going back again. The robot is not like, no, I need to grab this profit right now. So this is the instruction I'm giving the bot. Hey, bot, I know the market is always changing. Once it reaches my 1.1 per chance, and the price of the market decides to fall, as it's falling, if it falls as little as 0.1, or more, quickly sell it off and take my profit from me. So this is like you giving an extra command saying, hey, Oga, this is the 1.1% profit. If, for example, you are doing one shot, you are saying, even if it increases more than this, no problem, just sell off. But as soon as you have been activated, as soon as you reach here, okay, and the price wants to fall, meaning you have already seen your goal, that can, you have seen your target already, but your target wants to run away from you. Like the moment you decide to drop down, depending on the percentage you set, I want you to sell it off. So the instruction that we are giving it is 1.1 is our goal. Okay. The moment you reach 1.1, for example, and eventually the market decides to come down by 0.1%, immediately activate yourself and sell off so that I will just grab the profit as I have it already. I don't know if this is quite understandable. I don't know if you all can understand this explanation. If it's quite understandable, let me know. All right, everyone is saying yes. Okay, let me see the next two. I hope the next two responses should be yes. All right, thank God. This is the first time I'm explaining this once. Usually I have to go over and over again. Thank God we understood once. All right, let me see if there's any one person who might say no, and I want to take it because, okay, everyone is a yes, thank God. So is there a no? I can't see any no. Oh, okay, let me check. Yeah, somebody's asking if the profit callback has to be. Yeah, definitely. You can leave it at 0.1, you can leave it at 0.05. Depends on you. So just to tell the bot that once the price drops by this little percent, then sell it off. It shows danger. So sell off immediately. That's the instruction. And the next thing you need to do is margin configuration. Margin configuration. So what is the margin configuration for? Now the margin configuration is this. Remember, this is the margin call. We have said we want 24 positions, right? Now the question now the robot is asking you, Oga, you have told me you want 24 positions. Okay, I agree. At what point in time do you want me to buy those 24 positions? That is the question the robot is asking you that you need to answer. So let's now go here. Someone is asking a question. Okay. Someone is asking, okay, I said something earlier. I'm sure this person didn't get it clear. I said, okay, when I explain one shot, let me check the name, Mr. Joseph, you will understand this better when we start talking about one shots. Okay, this question you just asked, I will try and touch on it. So I don't go back and forth. So the next question now is margin configuration. So you need to now tell the robot, I want 24 positions and I want it at this time, at this time, and at this time. All right, the times you want the margin call. So let's now go into Binance and explain this better. So when you go to this Bitcoin, for example, BTC. So let's imagine, for example, you're buying here and you're telling the robot, if this price falls by 2% or by 1% or by 10%, any percent. So you're saying if it falls by 1%, for example, buy another one. If it falls by another 1%, buy another one. If it falls by another 1%, buy another one. If eventually it falls by 2% again, buy another one. Falls by 2%, buy another one. That's just what you're trying to tell the bot. As funny as that, don't mind the way my voice is sounding. Okay. Someone is asking why I always use BTC chat. But I just prefer using BTC based on the fact it just gives you the explanation, and it's easy to calculate and get the explanations. You can use various chats for what you're doing, but this is an explanation, so I'm more comfortable using BTC. Not like there's any big deal to BTC. So that's the same thing with margin configuration. So whatever coin it is you're buying, now this is AVAX. This was the way we set our trade. Now there's a screenshot. Let me show you a screenshot. I think I made a screenshot of the day we set it. I changed some things at some point in time. So usually when people ask me to show them my settings, I usually tell them, learn the basics, because there are sometimes you might need to change things, or there are sometimes I might change things and you are not even aware of changing it. For example, look at this was the original way we set it. From our 11th margin call was 1.5. Our 12th margin call was 1.5. Well, let us go back to what we have today now in the bot. So our 11th margin call is 2. Our 12th margin call is 2. So our 12th margin call is 2. And I will show you why that is the case. So, but let us go. Before then, let us go. So we are telling the robots, now look at, when you come to margin configuration, there are two things. This is margin call drop. This is multiple buying ratio. Now, these two things are very important. In margin call drop, we are saying if the price falls by 1%, then what happened? Buy 2 times my initial capital. Your initial capital is $20, right? So yeah, saying if the price falls by 1%, buy 2 times 20. I don't know if you get it, Jack. So margin call drop. You're telling the robot, if the price falls by 1%, buy what? 2 times what? 20. 2 times my initial capital, which is $40. I don't know if you understand. I don't know if you get this point. Now, also another expo, like Bolanle said, is the day we were setting this robot, we used 1111 because definitely it was $500 we planned. So everything has to be 11, meaning $20, $20, $20. But if you discover, I eventually came back here and I changed it to 2, 2, 2, 2, 2. And I'm going to show you why I did that. Eventually, I will still come back here at some point in time to change it to 1. But just for you to understand that this bot is very flexible. It obeys all your instruction. So you do not just need to depend on, Alex, give me settings. No, settle down, understand how the market works, and trust me, you will do wonders. So, but first of all, let me explain this. Then I'll now start explaining you the reasons why I changed everything that I changed. Okay. So the next, and this thing is, if it falls by what, 0.8%, what happens? Buy another 2. This is the present instruction here. If it falls by another 0.8, buy another 2, just like that. So we have over 24 margin calls. So look at 24 margin. So now notice this. Let me take it slowly. Hope you can see my screen. Let me be sure. Somebody complained that it was hanging. Can you all see my screen now? If you can see my screen, let me know. Okay, beautiful. So if you noticed, my first margin call was 1. I started using 0.8, 0.8, 0.8 down to my 7th margin call. Then from my 8th margin call, I started using 1, 1, 1. From my 10th margin call, I started using 1.5. For my 11th margin call, I started using 2. You notice the increase, right? So let me now ask you, does anybody understand why I'm doing it like this? Why am I not just using 1, 1, 1, or why am I increasing? If you understand it, put a yes, and I will mute you so you explain to us. So it's not really like it's Alex talking. If you know you understand it, just let me know so that I would unmute you, then you can explain to everybody. Okay, who said it yes? Sandra said yes. So let me unmute Sandra. Sandra, should I unmute you? Let me know first of all. Let me seek your permission so that you explain to us the reason for that. So can I unmute you, Sandra? Or Bolanle, can I unmute you? If yes, let me know. Let me get a response first so that you can explain to us. Who else again? Bongstar, South Africa, Master Wanza. Anybody, can I unmute you? Okay, so let me unmute Bolanle. She has replied. So Lady B, I would unmute you now so you can explain to us. So please, you can now unmute yourself so that you explain to us the reason why the increase at some point in time.
Yes, I feel because from the fifth margin call, the bot sells independently. So you're trying to increase it to make more profit. That's what I believe.
Okay, all right. Thank you. Thank you very much for that. Okay. So I will just go ahead to kind of explain it right now. All right. Thanks so much, Bananli. I really appreciate you. So basically, now if you notice, over here, we're using 0.8, 0.8, 0.8. Then we came down, we started using 1, then we came down, we started using 1.5, and next thing we went to 2. And the reason is quite simple, almost related to what Bolanle said, but quite a little bit, there's a difference. Now, if the market, I'm making my strategy now the market, there are two types of markets. We have what? Bullish markets, and we have the bearish markets. Now, the bullish market simply means people are buying, so the price of these coins are rising, like they're rising like wildfire. Why the bearish market simply means people are selling off, they're selling off. Probably something has happened, there is a bad news. The thing is, there will always be bad news about crypto. For those of you who are new to crypto, since 2010, 2011, you must always hear market has crashed, market has come back, there must always be bad news. That is why when you are trading, you need to use what we call capital management, and that's what this robot helps you to do. That's what we are doing now. So bearish simply means something has happened, people are selling off, and the price is crumbling, London Bridge is falling down, everybody's falling. So now you need to set your robot in such a way that whether there is good news, that's if the market is bullish, you are enjoying. If it's bearish, you are enjoying. Now, how do you set your robot for a bullish market? First of all, in a bullish market, remember I said in a bullish market, the prices are going up, but don't get yourself deceived. The price of any coin does not go up like this. No. Well, how does it? Now, this is how the graph of a bullish market works. It goes up, it corrects itself a little bit. Okay, it goes up again, it corrects itself a little bit, and it goes up, it makes a correction. This is how a bullish market works. So don't think it is like this. If you understand this explanation of a bullish market, let me know first of all. If you understand this explanation, let me know first of all. Okay, beautiful. Now, in the other case, for a bearish market, this is how the bearish market looks like. It comes down, then there's a small rejection, so it goes up. Next thing, it comes down lower again. There's a small rejection, it goes up. You understand? It comes down again. There's a small rejection, it goes up. So this is also, so in bullish market, you must see coming down, it goes up and come down. While in a bearish market, it comes down and it also goes up. So that is it. The market is always moving in any which way. So now, consolidated market basically is usually called a time of accumulation. It is almost the same thing. So you can see something like this. Then next thing you see little movements like this, basically a period of consolidation. Then this is usually a period of decision also. So after a period of consolidation, it's either it's going bullish again or it comes down to bearish. So basically, for the person who asks about consolidated markets. So now, having known this, in a period of bullish markets, that the prices must always come down. That is why you see me here now saying, okay, now AVAX is bullish at the time of doing this. We are not, allow me, all these questions can actually be taken to later, right? So AVAX is really bullish at this point in time, okay? So that is why you now see me saying, okay, I am entering now. In a bullish market, it is very, very, in fact, it is normal. The price must fall by 1%. You will see minus 1%. It is very normal that the price will fall by 0.8. So if we calculate this now, let us calculate my first 7 margin calls. So this is my first 7. 0.8 plus 0.8 is equals to 1.6. This 0.8 plus another 0.8 is equals to 1.6. So this is like 1.6 plus 1.6, that's like 3.2%. So this 0.8 over here, and this other 0.8 is equals to 1.6. So that's like 4.8%, and plus 1, plus this 1, 5.8%. So let me ask you, in a bullish market, is it possible for a coin to dip by 5.8%? Is it possible for a coin to reduce by 5.8%? Is it very possible? Of course, it's possible. It's very possible. So, for example, AVAX, let's check the present price of AVAX, this coin we are trading right now. Hope I haven't changed anything. No, this one I'm saving it. So AVAX, the present price of AVAX is $131. Okay, let me just refresh it again. All right, so the present price of AVAX is $132, as we can see here. So let's check what is 5% of $132. So 5% of 132. 5% of 132 is about $6. 5% of 132 is about $6. Let us go into the graph and see. AVAX fell by $6 today, and AVAX is bullish. So don't deceive yourself saying it's not possible. So let me go to AVAX for you to see AVAX. AVAX was around 140 earlier. So AVAX, I really wish everybody attended this Zoom meeting, because I don't know, the way I'm just happy this evening. I wish everyone is learning like this, because tomorrow now I might not be in this kind of good mood. Okay, let this load now. My phone is quite slow. So many things working at the same time. Let me just refresh this. Sorry about this. Okay, so many things operating at the same time on the single phone. So it's bound to do this. All right, so let me search for AVAX again. So AVAX. All right, beautiful. Yeah, someone said Binance works better on iPhone. I agree with you. Just that it's my iPhone I'm using for the meeting. The iPhone is one hosting the meeting. So this other one is one I'm using for explanation. If not, I've logged in on my iPhone. So basically, AVAX was at 147 today at some point in time. So let us now check. And the present is at 132. This is a bullish market. So let us check what is 10% of 147 is $14. $14. That's 10%. So let's now calculate 132 plus 14, 146. In other words, AVAX dropped by 10% between this morning and this afternoon, or this night that we are talking. So even in the so-called bullish market, look at it now. In the so-called bullish market that we are seeing, let me expand it for you to see better. So in the so-called bullish markets, what are you seeing? There's a correction. Hope you guys now see this compared with the explanation I gave just now. Do you now see the two comparisons? In a bullish market, there's also a correction here. Do you understand it? So now, but the beautiful thing is, it is this kind of moves that make money for you. These are the crazy moves that I really enjoy, that you enjoy this RoyalQ Bot with. For example, let's see now. We are just doing Zoom meeting, Abby. Sure, you can see there is a sell. Meaning one of my positions just sold presently. There's a new sell in Binance. So let's go on. So let's go and check our balance now. In the how much you have made now. Let me check revenue. So when we started the Zoom meeting, it was 1.6. Now we have made 1.9. That's because I'm using $20. So 1% of $20 might be 0 point something cents. You understand? If I was using something more, I'd have just imagine I'm using like $100. I will make something more reasonable. So, but basically, let's continue our explanation. I will just take my time and round up shortly. I thought I could finish this before 9:30, but let's take it as we can, sure. So this is the idea here. So for the first 7 margin calls, I have prepared it in such a way that even if the market falls by, what we calculated 5.6 or be 5.6. I've forgotten what we calculated just now when we were calculating. I think 5 point something. So for my first 7 margin calls, then I'm not like, okay, what if the market continues to, fall, drop or so? So my 8th margin call is 1. So imagine we calculated 5.6. I can't remember the exact thing we calculated. Let's just assume 5.6. So plus 1 now will be 6.6. Plus another one will be 7. Okay, we'll calculate 5.8. Thank you for that. So 5.8 plus 1 will be 7.8. Plus another one will be 8.8. So even if the market falls by 8.8, what happens? I am still in the market. I am buying more dips. If the market now falls 8.8 plus 1.5, I don't forget math, so let me just use calculator. 8.8 plus 1.5. So even if the market falls by 10%, as we saw today, what happens? I am buying dips. Let us now go back. Let me show you how this is practical now. Look at number of margin calls. What does it tell you? How many margin calls can you see? I want you to type it yourself. Let me know. How many margin calls are you seeing? How many margin calls can you see here? 9. Beautiful. And remember, when we went back just now, let me show you this. Remember, one of those margin calls just sold. Remember, there's a sell here. So meaning my 10th margin calls just sold. What does that tell you? As soon as AVAX fell by 10% today, remember the calculation we made, this calculation we made 10.3%. So it means as AVAX fell by 10% today, what happened? I bought 10 margin calls, I bought 10 dips because of the way I did my settings. I don't know if this is making sense to you, if you're understanding this. So AVAX is rising now. I have sold off my 10th position and I've made profit on my 10th position. I don't know if this is making sense to you. So Shay announced that it's not magic that we are doing here on the RoyalQ bot. It's not, it's basically you just setting it yourself and making sense out of the robots. So the next thing now we need to do is, let me go back to my settings again. So I now told you something about this other side too. Okay, let me even conclude with this one. So as we are now going deeper, for example, I'm now increasing the margin calls. So you're now saying 2, 2, 2, 2. So the reasons you see here as 2, 2, 2, 2 is because I'm now saying, okay, if the market continues to fall, let's imagine all of a sudden the market turns from bullish to bearish all of a sudden. So the market just continues dropping. So you would now have to say, okay, I need to start increasing the gap for my margin calls. So you see me doing 2, 2. So if you calculate all this together, like we calculated yesterday, it will give you a total of about 30-something, 37% or so. So what happens here is, even if the margin call or the market, drops by 37%, no shaking, I'm still in the market. If the market drops by 37% from this setting I've used right now, my 24 margin calls and all that, I am still game in the market. So like I asked, what was the reason I changed my 11 and my 12th margin call? When I noticed that AVAX had fallen by 10%, remember here, once you get here, it's 10%. I calculated everything 10%. And I'm like, AVAX is dropping by 10%. What does it mean? Would it continue to drop further? So we're using 1.5, 1.5. I was like, this is strange. For AVAX to drop by 10%, let's hope that is the lowest it gets to. But what if it increases? You understand? What if it's getting bearish? What will not happen? I was like, okay, no, let me not increase this to 2, 2. Meaning the bot will not just buy immediately. So if it now drops from 10% to 12%, it will buy another one. If it drops from 12% to 14%, it will buy another one. Okay. Now, if eventually it now drops from 14 to 16, it will buy another one. Then if at this point I'm now noticing it, what I can now come to this 2, 2, 2, what, if you're you, let me know if you're following my explanation. If it now eventually enters 14, what will I now do? What do you think I'll do? Would I increase it or would I reduce it? Once it enters 14, 15, and it's still dropping, will I increase it or will I reduce it? Let me know. Beautiful, Daniel, thanks. I'll definitely need to increase it, meaning I'm giving a wider gap. So this is why I say, do not depend on Alex. I've stopped sending people settings. So that's why I'm taking my time to explain it. So because if I send you, God knows I'm not doing you a favor. For example, somebody who just came to the Zoom meeting that day and copied my settings, hook, line, and sinker, would not know that I did all these things today. So that is the bad thing with sending people settings. So, but if you know the basics, then trust me, you can use this thing and enjoy it. Then the next thing is this other side. The day we set it, we're using 1, 1, 1, 1, 1, 1, or 3. But today you can see they are 2, 2, 2, 2. The reason is what Bolanle explained. The market is bullish. So the price is going up, 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 up. So I'm not like, okay, ordinarily, if I'm using 1 here, okay, let's imagine I'm using 1, that's 20, 40, 60, 80, 100, 120. So I'm like, if I'm using 1, 1, 1, and the market is not actually falling below this level, I'm not able to buy more dips. So let me just increase it to 2, 2, 2, so I can buy more and make more profits. You understand? Exactly. Abdulaziz just said this so that I can increase the chance of me gaining. That's why I increased it to 2, 2, 2 and buying more. But I know I'm also taking a risk. But the fact why I'm able to do this like this is because I'm always alert. I'm always with my phone. So if I check the market and I discover the market is dropping, I can easily come here. And what happens? So when I come here now, I can easily control this profit I'm making here. Let me tell you, this risk I am making here. If the market is falling drastically, what I will easily do is I can come here and increase the settings here so that it doesn't buy more. I don't know if you understand it. So And if I have more money, I can top up my account for trading. If I don't have, I'll just increase. So I can now make it 4 or 3, depending on how fast the market is dropping. But I don't know if you all understand this explanation here. I don't know if I need a response. Then we continue to and we look for how to round up. Okay, so that is it. So beautiful, beautiful. So remember I said something about open position. Remember I said something about here, open position double. Now, what open position double does is this. You are simply telling the bot, buy times 2 of whatever it is. So if, for example, here is $20, instead of me changing this to 2, what I could have easily done is I will just open that position double. That's why I'm surprised I own it now. I'm supposed to off it. So what I can easily do is just, I could have left here 1, 1, 1, 1, 1. Then all I will do is, if I leave here 1, 1, 1, I will just simply come here and on here. Meaning what that simply means is buy times 2 of everything you're supposed to buy. So ordinarily in the margin call here, I set 1, 1, 1. But since the market is bullish, buy 2, 2, 2, 2. That's open position double, like double every position you are opening. So now that I put 2, 2, 2 there, I'm indirectly telling you, but buy 4, 4, 4, 4 for those ones that are 2. That's why I'm supposed to off it. I'm surprised it's still on. I was using it to show somebody something. Maybe that was why I left it. I was explaining something to somebody earlier today and I left it on by mistake. So it's also a setting you can use if the market is bullish. But even when you do that, also be careful. So like me, I forgot it now. So always know when to on it and off it. But at this point, hope we're all together. Let me even send those left in the group. Wow, we still have 99 people in the group, in the Zoom call. But I hope you're understanding. We're together, right? We're still together. Okay, beautiful. Then which one now? Okay, we're in the buying callback. Now, what the buying callback does is very simple. The buying callback simply says, now look at it, I am buying here and I'm selling at 1.1% profit. Once the price drops again by 0.6%, I want to buy back. Very simple. Once it rises again by 1.6, 1.1, I want to sell. Once it drops by 0.6, I want to buy back. Once it rises again by 1.1, I want to sell. Once it drops by 0.6, I want to buy back. As simple as that. I don't know if we are getting it. It's quite simple. I don't know if you're understanding it. Do we understand? I'm waiting for a reply. Okay. All right. So then the next one is this. I'll try to be very fast right now. Distributed and take profit allocation. So this would take some time to explain, but let me go to my notepad and see. So how does that distributed and take profit allocation work? First of all, let me even come back and show you. You can see some settings here, right? I would explain that for you. Now, basically, this is how the robot works. This is how the robot works. So let's imagine this market, a market like this. So for example, your first 4 margin calls work together. Your first 4 margin calls, they work together. Okay. Now, what do I mean by they work together? So let's imagine I am buying in here. This is my first buying amount. This place here, my first buying amount, $20. Then I now buy position 1, first margin call, second margin call, third margin call, fourth margin call. Now, these 4 margin calls would sell off together when the price is above 20. I mean, it's above the first buying amount. So let's imagine I bought my first coin when it was $10. Now I bought this one when it was 9. I bought this one when it was 8.2 or 8.6. I bought this one when it was 8.4. I bought this one when it was 8.2. Now these 4 will sell off together. It will be buying the depot, but they will sell only when the price is above my first buying amount. I don't know if you're understanding this explanation. I know it's going to be technical, but this is where we'll soon end. For those, just try and stay to the end of the call. Don't be in a hurry to leave. We'll soon end, okay? I don't know if we are understanding this explanation. Let me see. Everyone is saying yes. I hope it's actually a yes. So. All right, so beautiful. Okay, beautiful. So we'll sell off when the price is above this. But for my fifth margin call downward, my fifth below, they are independent. This is what also Bonande was explaining. For my fifth margin call below, they are independent. So what happens now is this. Let's imagine I buy my fifth margin call here. Okay, I buy my sixth margin call. The market is going and I bought this fifth, sixth, seventh, eighth, and ninth. So what this simply means is if the market, for example, now goes up by 1.1% above my ninth margin call, I can sell this off independently and take profit on this. I can sell this independently and take profit on this. If it falls again by 0.6, as you have seen, I can buy it back. If it rises again by another 1.1, I can take profit on this. If eventually it rises above here, above my 8, I can sell my 8 and take profit on my 8 independently. If it rises above my 7, I can sell my 7th and take profit on it. If it falls again, I can buy my 7th, take profit on it. So this is what this will basically, let's imagine, now let me clean this. So imagine this is a market. This is my first, second, okay, this is the market. This is my first buying amount. First margin call, second margin call, third margin call, and fourth margin call, for example. So from here, this is my 5th, 6th, 7th, 8th, and 9th. So imagine this is the market coming like this, for example, going up, coming, going up, coming, going up, coming. Within my 5th margin call downward, let me now ask you, will I be making profits here, over here? Will I be making profits on my 5th margin call downward? Okay. Okay. Exactly. For my 5th margin call downward, I will still be making profits. Now, this is different from somebody who just bought here. The market went down. It's coming up, it's going down, it's coming up, it's going down. This kind of person that you bought all, it is all his capital here, everything here. Would this person make any profit at all? Would he make any profit at all? Beautiful. So that is it. So the next question now is, what percentage do you set? Usually, I leave mine at one, any percentage I'm using as my take profit, I leave it the same thing at this place. Some people will tell you that this will make this one higher. Some people might put 2% here, some people might put 3%. The argument they will give you is, since they are buying when the price is lower, very lower, they want to make more profit from those lower positions. But me, I like leaving it at the same thing, because what if the market is just at that low position, going up and going up little, coming down, going up little? I want to be taking advantage of every small movement of the market. So that's why I leave mine at the regular 1.1. Then this explanation here, this last one is the same explanation here. This last one is the same explanation. Just that you're not asking this profit callback. If you remember the explanation of a profit callback, it's the same thing. But the robot is not asking you for from your 5th margin call downward, do you want the same profit callback? I want the same profit callback. I want everything the same. So here is the same thing. So here, for me, I use the same settings here for here. I use the same settings here for here. Okay, sorry. Can we hear me now? Can we hear me now? I think I had a network. Can we hear me now? Okay, I was disconnected. I was disconnected shortly. So let me go back to share my screen. Um, okay. Can you see my? Okay, let me just. Okay. Okay, just. Okay, let me just go back to reshare the screen. Yeah, let me go back to reshare the screen again. Um. Okay, what's happening? Let me just. Well, sorry, just a minute. I'm still trying to share my screen. I'm seeing some error messages. Let me just try and redo it again. Okay. All right. Can we see it now? Can we get to see the screen now? I think I'm back online. Are we together? Can we see the screen? Okay, all right, beautiful. So after doing all of this, after doing all the settings which I've showed you, now I know it might seem so tedious, right? But trust me, after once, twice, thrice, you'll be very used to it and you understand it. So after doing all of this, click on save. So after clicking on save, so let me save right now. So now, okay, I think it's loading. Okay, so now somebody should look at this point and tell me, what did you notice? Did anybody notice something from this margin calls? If you notice anything, let me know. Let me see those who are quite observant here. Who noticed something here? Did anybody notice anything? Exactly. Meaning, I can assure you one has sold. So when we go back to the homepage, I'm sure we'll see a notification. And look, the last time we came here, the price was at 132. Right now it's at 134. Do you now see how sweet it is buying all the dips and selling the highs and making profit? And it's also very obvious that if I go back, the profits over there has also increased as well. That is living the life, a very comfortable life. You're doing what you're doing and you're making your cash. So, but before we round up, let me show you some things you need to note. You can see here, this is a one-shot option. So when you're seeing one shot, it's obvious you're on cycle. Look at this where you need to pay attention. So up here. So basically, we are presently on cycle. Cycles is just like the name cycle. It means it is not breakable. So the bot is buying, is selling, is buying, is selling till whenever you tell it to stop. That is how cycle operates. But one shot simply means you just want to buy once and sell off once. Like you're buying once, you're selling off once. So this is like you doing manual trading on Binance, but this is also sweeter than manual trading on Binance. So for those who ask, the reason why those who ask, some people will be like, I'm in signal groups, they send us signals, so we trade these signals, blah, 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 and all that. But if I'm on RoyalQ, I cannot use signals. Come on, who says you can use signals on RoyalQ? In fact, most times on my groups, I send signals. But the reasons I've not been sending signal basically is the market is quite complicated at this point in time. And I know I've not really taught many people how to use signals. So once I send signals, everybody's like, what is this? How do we use it? So it's quite tiring to me. But in this Zoom meeting, let me explain everything. For those who will wait behind, I'll teach you how to use signals so that whenever I send, you can get to utilize it, okay? So if you take it to one shot, basically it means you want to use signal, okay? Then the next thing is the sell option. The sell option is like, usually if you have programmed it ordinarily, the bot knows when to sell by itself. But let's imagine you have an emergency, you just want to sell off everything and probably just want to cancel your account or for whatever reason you might have. Once you click on sell, you will just sell off everything in your account. While this buy is used, like, let's say you want to buy more. Now, this is used for manual replenishment. I will try and do a video on YouTube probably tomorrow to explain how manual replenishment is done and what it means. Now, you can use manual replenishment for any type of trading, both futures or whatever. I will explain how this is done, but this will take time if I'm explaining it, but just put that at the back of your mind. Now, this other option here is stop margin call. This is also very important if the market is going down drastically, like the coin is just falling, it's about to enter a bearish mode. So instead of you going to change all your margin calls the way I taught you, you can just come here and stop your margin calls. So stopping it simply means, okay, let me just stop the margin calls. Let me wait and look. So after stopping it, you can now reset whatever you want to reset to dance to the new tone of the market. Then you can come here and start it back. While the next one is strategy mode. Now the strategy mode is quite simple. How does this work? Now let me click on it. There are 3 strategies you can use here. So you all remember the explanation I gave for your first to fourth margin call, right? I explained how your first to fourth margin call works. If you still remember the explanation, let me get a yes in the chat. If you still understand, just send me a yes in the chat, let me know. Okay, beautiful. So if you put it on whole warehouse mode, it simply means all your positions will behave the same way your first to fourth are behaving. So all of them will sell off at once the price is above the first buying amount. God knows I do not like this strategy. So I use the sub-in real-time mode, this last one. The sub-in mode, what does it mean? It is what I explained to you. Your first to four will behave the way I told you to behave. From your fifth to whatever you are doing will behave independently. They will be selling off independently. The only difference between this sub-in mode and the sub-in real-time settlement is They will be trading, it will be selling off. You'll be seeing your money in Binance and all that. But the boss will not record it until everything, until your first buying amount are sold, until you now sell all your positions, the bot will now give you the total record of everything. So me, I don't like this. Since basically I'm a presenter, I'm showing people how to use this. I really need them to see my profits as it is working. So as soon as I'm making my profit, I want them to see so that they can easily get to understand how this bot works. So with this, whenever it makes a trade, automatically it records itself, you see it and all that. So after selecting it, you click on confirm. After you have done this, then you are ready to use this bot. You click on start. So once you click on start, good and fine, you are done. So basically you can see this is the news of the sale. So I sold. Let me go and check now. I must have made a profit whether I like it or not. If I was a manual trader, I can't be doing Zoom meeting and be trading now. This is a beautiful automation. Beautiful, you can see 2.1. So for example, when you see me in all the groups now, when I start sharing my testimonials, don't think it's unless there's manufacturing figures. Thank God you were at the Zoom meeting when all these things were done. So I'm done with the main presentation. I have 10 minutes left. I'm not show you 5 minutes. I'll show you how to do what's it called? How to do the one shot. So if you want to leave, you're free to leave now. But if you want extra knowledge for free, okay, if you want extra free knowledge, wait for the next 10 minutes. Trust me, exactly 9:56 will close. So let's do the what's it called now? The one shot. Let's do the one shot. So somebody's asking a question, so it doesn't seem as if I'm ignoring you. Well, first is what is a correction and what is a rejection? So basically, let me just answer. This is not really related. Okay, let me finish what I'm saying first. Let me finish the main thing. If I'm done with the main thing, I can now answer that question since it's not really related to what I'm saying. So how do we do one shot? Now, one shot is this. So imagine you have a signal. I used to send signal. Let me see if I still have a description. Let me check my notepad. This is where I used to arrange my signals before I send them. Okay. So now imagine in the group, you see something like this. So in the WhatsApp group, I'm telling you like one shot, telling you buy this coin, this compact versus USDT, that's comp versus USDT. And I'm telling you enter when the price is, between 310 to 320, for example. And I'm telling you, okay, take profit at 3 to 5%. Take profit at 3 to 5%. And I'm telling you, okay, this is the target price of this coin. So we are assuming, and this is why we have to be very conscious here, because I might tell you this is the target price, but definitely I do not know at what point in time it's going to get to these various target prices. So what happens is, if you're trading a coin in one shot, you have to also be observant. So usually what I would always recommend people is, so let's imagine we're entering at 320 and you see it reaches target 1, you've already taken maybe your 3 to 5% profit. Watch it. If it does a retracement and you now see it like a retracement, like, okay, this is 320, it reaches 347, for example, you've already taken your profit. Most times I advise you to take your profit and watch it. Usually it would make a retracement. Once you see the coin making a retracement and eventually it's going back, you can now have an idea, okay, maybe we are heading towards target 2. You can enter the coin again and wait for target 2. But usually, I myself who won't send targets, what's it called? I send signals. On my main account, I use dollar code. I trade cycle. I don't use one shot most times because you cannot really predict how this market works. So this one shot is basically for those who just really need to make some quick cash, just trade once and get off, trade once and get off. But I do not really recommend it for those who don't have much capital. So this is how I do my capital. And this is how I share it. I've said this several times. If I'm having $10,000, which I think I'm trading on my main trade account, $5,000 basically is on, on normal RoyalQ, and I'm trading with the normal cycle. $3,000 is on USDT. I've not used it. I've not bought with it yet. And why is it that I've not bought with it? Just in case there's any crazy thing in the market. And it's like, for example, when Bitcoin went as low as 56,000 and all the coins fell, I exceeded some of my margin calls. So it was then I had to pump in from this $3,000 into the market. The remaining $2,000 is what I use on one shot. I just buy, and once I do a signal or done analysis, I'm like, okay, this coin is good to go. I just trade it sharp on a signal base. So what I'm doing here is basically 50, 30, 20. So 50% of my capital on normal cycle trade, 30% of my capital just not doing anything, just in case there's any emergency, like what we saw last week when Bitcoin went to $56,000. Then 20 for my normal day-to-day one shot. But if you're starting, you don't have much capital, I would really recommend If you're having a good strategy like the one I've taught you, just stick with that idea I told you. Set your trades well and leave it and be making your profit small. Otherwise, if you want to do this, for the sake of those who have asked for this video, this is how you can implement these on the RoyalQ Bot. So the first question is, we told you enter between 310 to 320, meaning if the price is within this range, it's a good entry for you. So, and also for this entry, some people will ask me, for example, now you might wake up one morning, maybe I sent it in the 90, you didn't see it. By the time you saw it, the price is already 320 something, 321, 322. In as far as it's not up to the first target, now that will be at your own discretion. So if it's a little bit above the entry, but it's not yet up to your first target, it is still quite considerable in your own judgment. If it's still quite considerable, you can still enter. You must not ask me, because there are so many messages. I might not even reply you at the time you're asking me. It may be later on when you don't need the answer, I might reply you. That's my life, usually very tight. So let's imagine the coin now is COMP, okay? COMP, that's the coin. So all you need to do is, first of all, why is my network slowing me down again? Okay, just a minute. I think I should. Okay. I hope everything is okay. So beautiful. So you need to search for COMP, COMP, for example. So it's under the general aspect, for example, as you can see. Okay. So the present price right now is around 311, as you can see it here. This doesn't mean you should go on for that's a very old signal. I've not really come back to this kind to do any analysis. So I know the entry price then was between 310 to 320. So somebody doesn't see it and think that's a recent one and you come and trade these. So if they are recent ones, I will send them in the group chat. So you need to do, first of all, click on COMP. Okay, go to your trade settings as we did. Now, note one thing, first of all. If you are trading signal, meaning you're putting a whole lot of money, you're like that person in that example that just wants to buy once and sell off once and make a whole lot of cash. So let's say you want to put $50, $100 or $200, depending on the amount you have. So you put that in your first buying amount. Then another thing you need to know, okay, let me be doing this, for example. So I'm going to put like 200, for example. I'm not going to trade it, just an experiment. So do we need margin calls? Let me now ask you, let me know if you have understood this lecture. We are doing one shot. We are not buying dips and the rest. So do we need margin call for this? Yes or no? Do we need any margin call trading one shot? Beautiful. We do not really need margin call. If at all we need margin call, and let me show you what's going to happen. There might be times you might need margin call actually. So let's imagine there's some signals I would send to the group. I will tell you buy in bits. So imagine I'm telling you entry and I'm telling you buy in bits, for example. For example, buy in bits. So that simply means, okay, if you're having $200 to trade this short, do not just buy the $200 one. Maybe you can buy like 80 once, buy another 80, and buy the third 80. That's just it simply. So you're buying basically in bits. So let's do the first scenario. We are not buying in bits, so we just want to use $200 once at this point in time. So you need to do is, first of all, you can't leave here in zero. You can't leave here in zero. So you must definitely put one margin call. I'll tell you how you make it not to act. So we do not need margin call for this type because we are not buying in bits. So you put here in 1, for example. So the next thing you need to do now is whole position profit ratio. So depending on what I tell you in the signal, depending on what you like. So usually I'll tell you 3 to 5, so you can put 5% profit. Now the beautiful thing with the RoyalQ Bot, remember I told you, if you still remember the explanation for this profit callback. If the price is just going, for example, going, it's, even if it exceeds your 5, it will not sell. It will not sell. It will continue going up. You understand? So it is only when it is now falling and is now going below by this percent. Once it now reaches this percent, like, I've already gotten the gold. It's now coming back again. It's not like, no, I need to sell off. So if you're using one shot, for example, if you put 0.1, for example, if it is a coin that you're sure it will continue to go up, and you put 0.1, what that simply means is this. As soon as it reaches the price and goes up, even if it falls a little bit here, it will sell off immediately. This is one shot. So it goes by 0.1. So if you're using one shot, you might be liberal enough, you might just take some and put 0.3 or 0.4. Why is that the case? You are going for a high percent already. You're going for a very high percent. So this is what would now happen. This is our 5%. If the price exceeds 5% and it's going and it doesn't fall, it will not sell. You can enter the bot by yourself and sell by yourself. But the moment the price now starts coming down, it now reaches the normal 5% profit and it now goes below this 5% with 0.4. That is when it will sell off. Like, is this not, like, this one sweets me that, like, I don't know if you understand this explanation. So this is way even sweeter than trading manually on Binance. Even if you don't want to use the whole cycle and the rest, this is way sweeter than trading on Binance. Okay. So, okay, I think somebody said no. I'm already running out of time. That's the problem. But just in case, probably during this week, like I said, I'll put the timetable for the 30 minutes a day, weekly program. I think I will also touch on this, but so that we don't get to waste too much time. Okay. So you can leave then this margin configuration. Yeah, someone is asking if you need to be monitoring the trade. Basically, you don't need to monitor it because even, like I said, even if it's falling by 0.4, it's here. But just for the fact that it is possible that this can go above 5% and continue going, and you don't want to be like, if I for increase and past 5. That's the reason I just want to do this. So once in a while, once you check your RoyalQ bot and it's above 5, then good and fine. You can sell it all by yourself. Otherwise, once it starts falling and it's falls by below that 5 with 0.4 here, the way we explained earlier, it will automatically sell up by itself and you take the profit. So what that means now is 5 minus this 0.4, meaning you will now take about 4.6% profit as against the regular 5% profit. That's just the simple thing. So in this margin configuration, what you will now do here basically is in margin configuration. So click on margin configuration. Remember, we do not want any margin call. But we cannot leave that place in 0. The bot would not allow us. In fact, the bot was not actually made for this whole idea. We're the ones trying, like I told you, you can use this bot for anything. Someone is asking why 0.4. It is not commercial to use 0.4. I just use that as an example. Feel free to implement. There's no reason behind it. Understand the reason why we are putting that there. So first, margin call. So we do not want any margin call at all. But since the robot said we must put margin call, no wahala. So we'll put 80 here. So what this simply means is I'm telling the robot, if this price falls by 80%, okay, if this coin, the price falls by 80%, that is the only reason you would buy another one for me. So you can put 1 here. But we know we are not really expecting the coin. In fact, it's rare, but it is not impossible, but it is rare for a coin to just fall by 80% all of a sudden, unless there's something critical that happens. So we do not really want you to buy. So we'll put 80 here, simply saying if this price falls by 80%, that is the only reason you're going to buy. So I don't know if you understand. So once you do this, so left for me now, if I want to set my trading, this is what I would do. Okay, so this is it, $200 one time, 5% or any percentage profit I want. For this position profit callback, it is up to you to change it, whatever. I just use 0.4 as an analogy, but understand the explanation I gave earlier. You can always watch the recording. I will share it in the group. For the margin configuration, I'll put 80 and 1, like you saw. I'll put this something like this, and I'll click on save. So after clicking on save, I will now come here and click on one shot. I'll take this to one shot. So I'll click on one shot now. So it is now on one shot. So that's why you can see one shot up here. Up here, you can see one shot. Then another thing I will need to do is I need to stop margin call. So I'll click on stop margin call. So basically, stop margin call means I don't want you to even buy anything at all. So with this, I can click on start and my one shot is set. That is the first part of margin, first part of one shot. That is, I am not buying in bits. But what if I tell you buy in bits? So buying in bits simply means, okay, depending on what, now there's sometimes you need to use your own discretion. It's not a time everybody will tell you something, you understand? So what you simply do is, let's say I want to buy 2 times, I want to buy $100 now, and the next time I want to buy $100. I can put 100 here. Margin call, I'll put 1 time, for as usual, 1 time, okay? Then margin call configuration. Here now, I can now put margin call configuration. I can now say, okay, if it falls by 3% or 4% or 5%, any percentage, that is when I want to buy the next $100. This is when you can use 1 margin call. I can put 2 margin calls, for example. So if it falls by another 1 again, I want to buy another 1. Click on confirm. So that is it basically. And you still click on your save. click on your save, and start your trade. So simple, depending on the instruction. If you're buying in bits, but understand, just get the basics. With the basics, you can do wonders. So with these, I can say we are done with the presentation. And just to quickly introduce you to something is, hope you all know, I'm not going to explain this basic, but I hope you all know that the RoyalQ Bot is for $120 a year. And with this $120 a year, once you invite your friends to buy this robot, hope you know there's a commission for you. If you don't know or more, ask your downline. It's going to tell you there's a commission for you when you invite people to buy this bot. So this is my networking account. Basically, I opened this account basically for the sake of networking. And basically, this is what we've been able to make within the shortest possible time of about 3 months. Within about 3 months, we have been able to make $13,873, which is over 7 million naira. Okay, just from selling this robot. So I'm going to send a video in the group, basically on the WhatsApp groups, which will explain this network marketing aspect very well. So I'm going to stop the recording right now. I can now attend to questions.